Good morning, everybody, and welcome back to Pipeline Trading. Let's get started with the markets. We're seeing a slightly higher open this morning. This comes on the heels of Taiwan Semiconductor reporting exceptionally strong numbers. Yet the stock is only up about 3%. Why? The stock has already surged roughly 85% since the April 7th lows. When a stock rallies that sharp into earnings, it's usually pricing in a beat. So even when the company delivered, there's often limited upside left in the short term. We'll look at the chart and key levels for trading opportunities shortly. This morning's jobless claims came in at 221,000. Just a month ago, we were ticking up toward the 240,000 to 250,000 range. For those new to the market, jobless claims represent people filing for unemployment benefits. The higher the number, the weaker the economy. The data is telling us that despite macro risks, the economy is holding firm. So seeing claims fall back, it's a sign of stability. Now let's look at retail sales, plus 0.6% versus expectations of only plus 0.1%. That's a big surprise. What does it tell us? From April, the S&P is up significantly. Taiwan Semi alone is up 85%. That wealth boost drives consumer confidence and spending. Markets briefly sold off on rumors that Jerome Powell might be fired. That fear subsided when the president walked back the claim and the markets bounced. Cuts are expected to pick up again in December and March, but based on today's data, there's no fundamental reason to cut rates. The economy is actually gaining a bit of steam. Consumer spending is picking up. Jobless claims are returning to healthy levels. First, tariff delays. Several major tariff deadlines have been pushed. Each 10-minute candle shows constructive movement since we got the economic data this morning. Markets are responding favorably to strong data, which helps relieve some fears about the impact of tariffs. That's a positive signal. Yesterday's Powell firing rumor caused a sharp dip, but markets rebounded quickly overnight. July 9th became August. First, markets are interpreting that as a potential softening of trade policy and tamed fears of inflation spikes that have not materialized. That's encouraging consumers to keep spending. We briefly closed below one of them on Tuesday, but a close below a line is not confirmation. A breakdown must be confirmed. Yesterday we dipped further but quickly reversed. No confirmation. Today we're back up again. TSMC crushed earnings top and bottom line beats fueled by AI demand, but the stock is only up around 3%. Why? Because from April 7th to now, it's rallied nearly 83%. That's a massive run with virtually no pullbacks. The stock was priced for perfection, and it delivered, but there's not much room left for the upside today. TSMC is now trading within a resistance zone between $244 to $251. A red close would be surprising even on a beat. Micron is trading lower. There could be a swing trade setup if it pulls back to the $100 area, where a key trend line converges. As of now, we're still just below that green trend line. If we confirm, we could break lower, but at the moment we're holding steady. What does confirmation mean? Let's review this. Support at $37 with resistance just above $39. There are a few key reasons for this resilience. Second, we have the wealth effect. With stock portfolios climbing, people feel wealthier. Despite the economic strength, the president is still pressuring the Fed to cut rates. If you found this helpful, give it a like, share. Comment below, and don't forget to subscribe for a sharper, technical insight to the markets. Looking at rate probabilities, there's currently a 52.6% chance of a rate cut in September. But a no-cut probability is creeping higher. For the month of July, there's virtually no chance of a cut. A 97.4% chance we stay at 5.25% to 5.5%. October shows a near-even split on whether we'll see one cut or two. The Fed should preserve that tool in case of a real slowdown. Cutting rates prematurely could reignite inflation. Let's go to the charts. Looking at the S&P futures, we see a solid, steady climb this morning. Futures were flat, and then retail sales and jobless claims pushed things higher. Looking at the daily S&P chart, we highlighted three key trend lines that have acted as firm resistance. Confirmation equals a 75% to 80% chance of continuation.
Nice.
No confirmation equals a 50/50th chance it holds. Trading is about probabilities, not emotion or assumptions. Something doesn't confirm, it's a coin flip at best. The US dollar is inching higher yesterday. It reclaimed a key trend line, but it hasn't confirmed a breakout yet. The 10-year yield is pulling back slightly after a strong run. There still could be one more push-up, potentially toward 4.55%, especially given today's strong data. Nvidia is hovering near a major resistance level at $172, a potential reversal zone to watch. GA raised guidance and is slightly up, but this chart is extended. Even the best stocks need to rest. Bitcoin broke above a long-term trend line, but printed a topping tail. A signal worth watching until it's negated that tail remains the dominant force. Ethereum hit key resistance at $3,450. If it breaks higher, next levels are $3,700 to $4,100. Gold slipped back below resistance. A recent short trade is targeting a pullback to around $2,070 to $2,060. Long-term outlook remains bullish. Silver is showing a topping tail as well. Oil is forming a classic bear flag. A confirmed breakdown could push it towards $63.70. With the possibility to hit between $54 to $53, natural gas remains quiet. But resistance is firm near $3.73 to $3.75. Earnings season is always packed with market-moving news for macro data like jobless claims and retail sales to individual stock reactions and rate expectations. The key is to stay disciplined, manage risk, and understand the broader narrative the market is trying to tell us. That's it for today's market rundown. Thanks for watching. Stay focused, trade smart, and take care. God bless you.